do pendulum, but it sounds like a complicated web. Next up, we're going to bring up a panel, bunch of local startups, or not local startups, local industries. But first, let's invite Cynthia up. She's a startup mentor and strategic manager. And they're going to talk about how do these corporates harness strategic value through their ventures. I mean, it's almost the exact opposite of what you just heard. So Cynthia, I'll let you invite your guests up. And
I kind of like the way the chair was facing the other way. I think that was a hint. Good morning, everyone. Thank goodness he let everybody stand up and stretch. And if my panelists will join me, come on up on stage. I've got Tanya Lowe from Microsoft, the M12 Venture Partnerships, Angelo DePriori, I'll say that correctly, from HP Tech Ventures. I like that. I've got Linda Elkins from Gore, the Innovation Center, which is actually nearby. And I also have Carlos Cordero. So what I'm going to ask you each to do is to take a moment and introduce yourselves so that people can know a little bit more about you, and then we'll get into a few questions.
I can start. Hey everyone, Carlos Cordero. I'm with Cisco Systems at the Global Infrastructure Funds team. I've been with Cisco 14 years. I went to Stanford originally. I've been here in the Valley almost 30 years, so very nice to meet everyone.
Hello, I'm Linda Elkins. I lead WL Gore's Innovation Center in Santa Clara. In case you don't recognize Gore, we're best known for the brand name Gore-Tex, but we do everything from medical device implants to filtration to farm bio and even elixir guitar strings. So excited to talk about our model and partnerships.
Hi everybody, Angelo DelPriore. I'm a partner at HP Tech Ventures. I work on AR, VR, esports and gaming, as well as data science, my focus area.
Hi, my name is Tanya Lowe. I'm with M12, that's Microsoft's venture fund. We're the corporate venture arm of Microsoft. We make mostly Series A to C investments in enterprise startups. I can explain more about the model, excited to do so, but been in the Bay Area for about a decade, spent some time in Chicago in grad school and bouncing around different other innovative ecosystems, and just excited to be here.
I really appreciate all of you joining us today. I really want to start out with a story, though. I want to find out from you, Tanya, what is the story about you stealing Warren Buffett's wallet?
All right, I'm pretty sure I know who told you that story. So I went to Chicago Booth, and every year there's this, MBA road trip to Omaha to meet the Oracle. And you had to read a book, take a test, and then go on the trip if you got selected. So long story long, it was one of those funny things where he actually turned out to be quite a ham. He gave a great talk. He had his Moody's, his Coke. We went to Piccolo Pete's and had this awful meal that was like crinkle cut fries. And anyway, there's a whole post about it, but at the end, he was very folksy and said, let's do a bunch of photos. So everyone was like, oh, let's do like Charlie's Angels, or they'd steal glasses or things like that. And when I went up there, I just said, well, can I see your wallet? And so that was the photo. Claim to fame.
Might have taken it and kept it, seeing who that was. What I really want to do is to go through the diversity of this group and to help you understand. Louis gave us a great introduction, about CVCs and kind of how they fit and how they might add value to your investment portfolio. But I'd really like to start with Angelo from HP Tech Ventures, since I think he's more of the traditional corporate venture capitalist.
So we do partnerships as well as investments, and $1 to $5 million check sizes. So it's like a large seed up to Series B, and we help our companies the way you'd expect, right? Like supply chain, brand, go-to-market, et cetera, technical due diligence, technical feedback. And then once the partnerships are happening with the business unit, we kind of act as a go-between as needed. But I actually try to step out of the way, and I tell all the startups I work with, the company has to love you more than I have to love you for the partnership. I can only kind of come in so many times. So I want to see the business really loving you more than me loving you, because otherwise, you can have the best contract written, but the person who's running that P&L, they have so many other little nuanced things that they control.
Great. And Linda, I think you have probably the most unique business model here. Can you tell us a little bit about it?
Sure. So our focus at the Gore Innovation Center is really around creating and accelerating opportunities for Gore by working with external partners. So we can do investments. That is not our primary intent. Gore is we are a materials company. We're very deep technology based. So we are looking for startups that are interested in partnering and bring complementary technologies to Gore, as well as new advances in material technologies, for example, sustainable materials. So we have about 11,000 square foot innovation center where we can host startups in a full prototyping lab and help accelerate the projects that they are working on, assuming there's synergy with Gore. And then we do that in conjunction with all of our business units. So we could be hosting startups that are working on a medical device next to someone that's helping in our filtration business.
Cool. Carlos, your position at Cisco is very uniquely different. Can you explain that difference to us?
So again, the name of our team is Global Infrastructure Funds. We're part of corporate finance, and what we do is we work with external private equity funds. We work with a number of funds. We also have a dedicated fund, so we're basically using other people's money to invest in business plans, mainly ecosystem partners and sometimes customers, in order to drive Cisco business. That's our number one goal. It's not to get financial return from an investment. It's really literally just to drive incremental bookings and revenues for Cisco. We do 4 types of deal classes. We do joint ventures with our customers and partners. We invest in growth equity companies, typically Series C and above. We also do synthetic equity or revenue share types of deals. And finally, we do structured finance deals for digital infrastructure mostly.
So it sounds like we have a breadth of investment opportunities here for those of you that are interested in it. But what I want to ask actually a little more fully is, if you look at growing your own syndication, what would that look like? If you wanted a syndicate partner, especially in your realm, because you're doing partnerships, Tanya, what kinds of things would you look for a strong partner in that?
So we don't do traditional syndicates, and just to give a bit more background on M12 structure, in addition to our investment team, which is pretty straightforward what they do, we have about 80 companies so far. As a 3-year-old fund, we've been pretty active. We also are global. We're about 20 people all over the world. We have 3 people in Israel, a partner in London, and then most of the team's headquartered here. And then we have portfolio development up in Seattle. And their sole mandate is to get traction within Microsoft. So that includes product integrations, go-to-market, first and third-party events, et cetera. But in addition to those 2 teams, we have 2 other teams which are kind of unique to M12, if I may. One is we have this BD Next organization that is really looking at next generation technology. We run the Microsoft Quantum Network out of that team. We have an expert in residence who's a former chip maker, a lot of ex-Qualcomm guys who are now part of our team, really looking at where's Microsoft headed, not just with software, but also with all the other parts of the stack and hardware as well. And then there's my team, which looks at partnerships. So to answer your question, syndicates, we don't really do those formally, but we do behave more like a traditional fund, or we try to be, looking for outsized financial return. We will co-invest when it makes sense. Some of our top co-investors are fellow corporate venture capital funds like Salesforce, Intel, Qualcomm, et cetera, Cisco, I think, as well. But then a lot of our top funds, I think we've invested with Kleiner like 5 times, Andreessen. We do work with a lot of the more traditional funds. These companies don't need to be on Azure. They, don't need to purposely move there, but typically they want to partner with someone like us because we have this well-oiled go-to-market machine that we can bring to our startups and really help them drive that, time to revenue, or accelerate the time to revenue. So yeah, to answer your question, we don't, but I would love to hear other people's perspectives on this, obviously.
Angelo and Carlos, the 2 of you have more traditional funds from that standpoint, What do either of you look for? Because I know that Linda's is uniquely different.
Well, I think we all want to make money, not a surprise.
Yes.
So I actually prefer to have a financial lead in the round because I know, unlike myself, where I've got a strategic angle, which I can kind of say, oops, my thumb's on the scale. I want someone who's strictly looking at this from a dollar and cents perspective, and also always have like an external third party come in for the next round. We're 3 years old, so our first investments are now coming up and starting to raise their capital, and we're kind of facilitating those introductions and starting to kind of see, the returns from the first investments.
What kinds of things did you get to ask for those investments?
I think corporates can actually add a tremendous amount of value, and people have different areas to add value to, right? Obviously, financials as well. So it's a very light ROFIN, right of first notice. Don't want to know the identity of the potential buyer. I don't want to know the terms. I make money when you make money, so I want you to get acquired for 10x. I just don't want to read about it in The Verge that you got acquired by a competitor without having some heads up. So it's a very light, let's align our business interests in the short and long term, and let's assure that you get as many offers as you can get, whether it's from us or from somebody else.
Carlos, what about you?
Yeah, sure. So again, we have a bit of a hybrid model. We're like a corporate VC in the sense that we like to do two things very well. One is engineering alignment with our various technological business units so that we can have an integrated architecture with our investments. That's number one. And then number two, joint go-to-market. So we look to develop a joint funnel and pipeline with our investments, and then basically accelerate them. And that obviously has a very strong impact on revenue growth for our portfolio companies. So we're like traditional VC in that regard. We're unlike traditional corporate VC in the sense that we have no strategic constraints. We don't necessarily align them with our Cisco strategy. We don't have that constraint. That's very liberating. It gives us a much broader scope of companies that we can invest in.
Linda, so tell me at Gore, what is it that you get to do in terms of, do you get a budget every year, or do you just get to throw money at companies that look really interesting?
So we do have a forecast. We, just for reference, Gore is a privately held company, so we're a 60-year-old privately held company, and we very much take a long-term view, both in the Innovation Center and going after new strategic areas and working with startups and understanding what our growth trajectories are. So that helps us tremendously from this innovation perspective in terms of finding the right startup, and if it is the right startup and we can justify it, then we'll move forward with them. Gore has certainly done acquisitions in the past, and we can certainly do investments, but we really target it towards complementary technologies that help enable Gore's growth in the material space.
Tanya, one other thing. How do you find, once you find your investments, how do you get funded from Microsoft? Is it annual? Is it quarterly? Is it off balance?
We invest off the balance sheet and have an annual allocation, which I can't disclose. But I would say from a process standpoint, we roll up to Peggy Johnson, who runs all of business development, and she reports to Satya. And the two of them, when they founded this fund, it was all about how do you agitate innovation on the inside, whether directly or indirectly. So there are certain unique things we get to do that let us sort of engage the product and business units and bring them actually out to the valley. And I keep uncovering different pockets of money across the company, which is kind of an interesting learning, which is that a lot of our product teams, and not that we're made of money, but we are doing well. But there are different teams that have their own resources that can obviously be put towards something. So one thing I really enjoy about my role is that in partnering with a lot of the top VCs out here and the founders, we can actually affect this kind of economic redistribution, whether it's direct investment or an introduction that will dramatically accelerate their business through a really effective product partnership. So that's been really fun. But aside from that, I should have shared this earlier, we make check sizes about 2 to 10 million mostly. If it goes higher than that for follow-on or successive rounds, there's a separate approvals process, but basically it all goes to Amy Hood, who says yes typically. And we move forward from there. And she's also someone where I didn't hold her wallet, but I held her bag.
So very close to all
just
that
wanted
money.
to bring it back.
Thank you all so much. There is so much more we need to talk about. For those of you that have more questions, these are really incredible people, and they can help you accelerate where your businesses are at. Thank you.
Yeah. What a diverse and interesting take. One thing that I picked up on this for hashtag f50 summit is each one of the corporate VCs had an interesting wrinkle, right? It was either, if you're like HP and Angelo, it's like, hey, let's keep it simple, keep it light, you make money, I make money. Then you heard about strategic partnerships, deep eng, and even Microsoft was saying, look, we want people to bring them in so they can work and we can both do this. So very interesting that nothing is textbook. There's always a wrinkle that fits each corporate strategy. But now we're going to turn it over into some of the global insights